Price action today started with neutral bias, consolidation, flat EMA, consistent price swings up and down, which means us as traders, we need to follow the short-term trend line rule, because every single time there's a break in your extreme, you can expect market to pivot. You're not drawing any wider channels while you're stuck in a small consolidation like this. You have uptrend working higher, breaking new high. We have a new low count reset point. First entry short pullback, second entry short. Double top held. Massive push below EMA confirming the trend and structure. And now we have a lower high confirming the second entry short, confirming the trend range. Because there is neutral bias, there is no reason for you to expect prices would continue to go higher. In fact, because it is rangy, we're most likely heading all the way down, and this is great setup, lower high confirmation setup. So what I have to do, I have to once again redraw a short-term channel on the chart, because there's a reason to price movement. It keeps pivoting. If you follow the short-term trend line rule, we're closing outside the channel. We have a new low, first entry short. So I like to see second entry short at the exponential moving average, and then continue selling because we need new low for this downtrend. However, new low has already been made, breaking new extreme, so downtrend played out. We're not thinking about selling. At this point, EMA is flat. We have a little bit of empty room here, but for the most part, it is still pretty healthy. We have a double bottom, but we can't really go long just yet, whether there's going to be the second leg down. And this is interesting. We have high low. The bar looked extremely bearish, reverse all the way back up. Look at it tail at the bottom. The low today support keeps holding. A lot of bulls are buying at this particular price level, and this is great high-low confirmation setup. Prices keep breaking above the EMA. You have overshoot, and this failed second entry short is below EMA. Now, strictly counting technically, this is micro double bottom count reset, so you can treat this as high-low, but visually this resembles two legs failed second entry short, so I marked it as a failed second entry short. Either way, you can treat it only as high-low if you reset the count. But you have overshoot, which can have stronger pullback in the opposite direction, and it's below EMA, so it cannot go long just yet. It created a break, a new extreme, and here's gonna happen what's gonna help you establish the current bias in the market. Because notice what we have. Small break new high. This was very pathetic bullish reversal attempt. We didn't even go this resistance, let alone all the way up here. So once this bullish reversal attempt is so tiny, this means now you have to zoom back, and every single major high is lower and lower. There is clearly bearish imbalance, which means if you're gonna break lower, you cannot be thinking about buying. Now you cannot go long anyway, because the short-term downtrend is in play and high impact news are going to be announced soon. But because we have imbalance, this reversal attempt is tiny, pathetic. The sellers are still in control. So prices keep working lower, high impact news came out, and we have another overshoot. We broke the trend channel line, which means now we can have stronger pullback, okay, in the opposite direction. So there's going to be second entry short at the EMA. We always skip the very first second entry short after overshoot. And notice I'm drawing my short-term channel a little bit wider, just a tad, because after overshoot, you have to respect the stronger pullback. Now the single bar is not great anyway, so you can't really sell regardless, but overshoot, draw stronger trend line, and notice what we have: break, move to a new extreme, and this is also important. Just like the price action is telling you the bias bearish imbalance, now this is the breakout area test low today. Why? Well, because we are in a trend range, and this is important support. We broke it, and most breakouts will fail, so prices went lower, market tested this breakout area, and now it's gonna tell you what to expect. If you're gonna break higher, you're thinking about buying. If this key level is gonna hold as a resistance, sellers will step in the market. This is gonna confirm that this downtrend now will get the new extreme. Pay attention to this breakout area, because this will tell you if you have to switch bullish or this downtrend is gonna get new extreme tested. We're below EMA. This is confirmation of the selling pressure. So I'm thinking about lower high for second entry long. It never formed massive leg down, which means basically that we already pushed too far down, so I cannot treat this as a lower high. Short option is in play, bad signal bar, and it is mainly first entry short because this downtrend simply pushed so far down. I was thinking we can get second entry short below this bearish bar. Of course, you cannot sell below bullish bar, but there was no break below this bearish bar, and we broke back above the important key level. So now you have to ask yourself, hold on, what's going on? This downtrend doesn't have technical new extreme, we only have double bottom. And why we pushed back above this important key level, back as a support. So I'm going to zoom back and I can see that the market is telling me I have one leg down, break, second leg down, perfect measured move. Market moves in pairs of twos. If you go on a higher time frame, it is easier to see. So you have perfect measured move, which means that the sellers took profit. This is considered enough as an attempt for a new extreme, so I'm no longer expecting a new low tested because we also pushed so far from the initial downtrend. This is a sideways structure, so you're not looking for any broader channels, stronger downtrends. You're simply going to adapt quickly. So now because you're back in the trend range, above the support, and the measured move was reached, you're not thinking anymore this downtrend is going to get new extreme, so you simply have to adapt. I'm going to draw a little bit wider channel, new high, first entry long, pull back, second entry long. Market moves in pairs of twos. We're at 2 key entry points, great tier 1 single bar. This is great second entry long. Uptrend is new high, confirming the reversal. Market cycle, bottoming pattern. Your stop loss goes 1 tick below the single bar. You have to wait for the trigger above this bullish bar. It almost stopped you. You survived by 1 tick. You had to sweat it out, but it ended up working. And this is why you cannot move your stop loss mid-trade. Okay, there's going to be pullback, there's going to be noise. Some traders, they will panic and they will take break even thinking that they almost got stopped out and they will miss a winning trade. So place your stop loss where it belongs, 1 tick below the single bar if you're buying, above single bar if you're selling, and the trade will either work or it won't. You're a trader and you have to accept losing trades. They're part of the game. Break in extreme. Now when I was watching this, I was playing with the idea that there can be wider channel, something like this, because it fits quite well, but it didn't get confirmed here. In fact, I have to redraw a massive spike down now. So the wide uptrend is getting very iffy. Now you have second entry long, but you can't really take it because it is closing below EMA or exactly at the level of the EMA. This spike down should get the new extreme. You didn't test the trend channel line. You know, the push phase is not as convincing. So because you have conflicting variables, you didn't even stay above EMA. You can't really focus on the broader channel. It's better to play this break in extreme. But I want to talk about this. If you were thinking about wider channel like me today, it's better just to be patient. And now you actually have decent setup. Second entry short. Second entry short. This downtrend needs to get new extreme. Decent setup. It's a little bit close to these lows, close to this support, but you have just enough for a scalp. So decent setup. Break and a new extreme for the downtrend. Okay, even this downtrend played out. And now you have to ask yourself, what is the bias? Where is the market heading? And you can't really answer this with confidence because all trends played out, EMA flattening, and the trend range is not consistent. So this is choppy area of development where you simply have to be patient and you have to wait for some proven established pattern in price action, because at this point you would be guessing. It's tempting to go long, it's tempting to sell. You cannot do neither because you have no key entry point. It is in no man's land, so simply be patient and wait for some established price action pattern. Okay, market keeps working higher, break, and we keep working higher again, which is quite confusing. We are breaking new high. Either way, I'm just going to be patient waiting. I cannot go short, I cannot go long. Market keeps breaking lower, so I'm going to redraw a brand new downtrend working lower. At this point, it is very flat EMA, resembling a small consolidation, basically acting as a small trend range. We push back above, so I'm going to redraw a short uptrend working higher. We can't really take a high low because this massive leg down can get a retest attempt, so we can't really cherry pick. Okay, we have a nice confirmed uptrend, so I'm thinking about second entry long at the EMA, because at this point this is confirmed trend range. Price swings up and down, up and down. Market keeps working higher. We have a small break, new extreme of the uptrend. So uptrend played out, and notice if I'm going to measure the first leg, copy it and put it at the top, once again perfect measure move to the very tick. Okay, I'm going to zoom back even more. So here we have the first one, leg down, break, second leg down, reversal, leg up, break, second leg up, reversal. Also, this is the important resistance, so we are part of the trend range. So because you are breaking new high, you cannot be thinking about buying because it's the top of the trend range. Most breakouts will fail, but it is still too steep for us to consider any short setup. So just be patient and see if we can break back below the strength range. Okay, market is correcting, and we can see if I'm gonna connect these swings at the top, I have a nice third swing confirmation. Okay, the reason why we can draw it wider and not tighter like this is because there is no uptrend present. All uptrends played out, and this is a sideways triangle structure, so we're not expecting this to be part of some uptrend. Okay, this is no longer a correction. We're expecting reversal, and therefore we're going to be drawing wider downtrend. We have new low, first entry short, second entry short, new high, first entry long, pullback, second entry long, failure, off the EMA, one key entry point, off the trend line, second key entry point, off the resistance, three key entry points. This is perfect. High probability setup, three key entry points, double high probability setup. It's part of the reversal after measured move, confirming three confirmations. That's the confirmation of the trend line. And in case you're not holding this, you even have lower high confirmation setup, even better. Great tier 1 signal bar. You know, you're gonna go lower. The trend line now has 4 swings. You have to trust it. Market continues to work lower. Okay, we have possible overshoot. No, because it's not acting as overshoot. After overshoot, you want to see stronger pullback. Possible break of the trend line. Because we broke lower, you have to widen and adapt. This is not looking like overshoot structure. What's going through your mind? Well, you're thinking about selling. Okay, this downtrend is clearly nice and it's still in play. So we're thinking about high probability setup at the key entry point, new low, first entry short, second entry short. It didn't trigger, but it triggered here. And this is not only second entry short. Actually, I'm going to mark it a little bit more aggressive. When I was watching this live, I had a little bit different signal bar, slightly uglier. Now this one is still doji, but when you have the triple test, trend line and the EMA, once again, you have a lot of key entry points, not just one, but I had a little bit worse bar here, so a little bit more aggressive, but so many key entry points. Uptrend played out with the break new high. That's a big sign as well that correction is over. Key entry point held, and we're gonna go lower. Prices keep working lower. I'm gonna widen it again, but now no matter which channel I draw, I can even draw a little bit steeper one from the secondary swing. I still have overshoot. So because we have overshoot again, and it really makes sense, massive spike down far from the EMA. If we're gonna get a second entry short, you have to be careful now. Just like we talked about, you pretty much have to skip every second entry short after overshoot unless it forms with really clean and broad two legs or the trend is very strong. But here we are still part of the trend range. So had there been trigger below this bar, you have to wait for a lower high. There was no trigger, so you don't have to take it anyway. Now we have a small break and a new extreme. We traded down, so this downtrend needs to get new extreme tested. So I'm thinking about lower high or for second entry long. We're pushing above EMA, and this is a big problem. We push so far down, you like to see a lower high quickly after you break below EMA like this. And now you have significant push down, and mainly you broke above EMA, so that's a problem. That's a sign that overshoot is going to be stronger. We're going to have stronger pullback, but we have massive reversal bar in this trick. I actually took this up myself. I'm going to mark it as a lower high because I knew it is more aggressive simply because it broke above EMA here. But such a massive reversal, I simply cannot cherry pick. You know, lower high after two legs, we need to get new extreme. The setup is either going to work or it won't. I drop a deep limit order and I got stopped out on this one, so no problem. So at this point, I'm going to measure the first leg, project it. So the reversal is going to be a little bit longer because we had overshoot. So let's see what's going to happen. Okay, we reached the measured move. Okay, and right now prices are breaking lower, so I'm going to redraw the short-term downtrend. At this point, we still need to get new low for this downtrend. We traded down, brought two legs. We have another lower high confirmation setup. I took this one as well, but you need to make sure you're going to use a little bit of limit order because how big is this? 3.5 points. So make sure you're going to use limit orders. Brought two legs, exact measured move. You traded down. You're selling high, which is good. You want to sell as high as you can. So lower high confirming the two-legged pullback. Now you have a full second entry long. Problem is this setup bar is gigantic. Such a massive second entry long. You can't even engulf it. So you really should be here. This felt second entry long seems a bit too aggressive because it's a massive bullish bar. You know, same problem a little bit as here. But now you have a second entry short. New low first entry short, second entry short. You have some small resistance here. You know, you can consider because now it's the confirmation that even the short-term channel needs to get new extreme tested. And by the way, I want to adjust this to more aggressive one because it's more of a steep lower high. There is no bullish bar in between, but because you're selling super far up after the 2-leg pullback, you can still consider, but only if you're going to use deeper limit order. Doesn't really matter, both trades worked for 3.5 points, so you got your scalp. At this point, short-term downtrend played with the break in your extreme. We should still get the new low for the downtrend, but prices reverse all the way back up. So now you have to stop looking to sell, because what's going on here? Okay, we're going way too sideways. We're going a little bit too bullish. So if I'm going to really zoom back, you can see we can't really break this important key level. So this was the last bearish attempt to test the new extreme. And because it's now getting quite late towards the close, you know, the market's just going to chop. You can adapt to this wider channel, but I would be patient here. I don't see anything good. And now it's getting way too late. It is just way too choppy towards the close. So this is the overall structure for today. We chopped towards the close. Quite surprising the downtrend didn't get the new extreme, but overshoot combined with the close of the market generated massive chop. Clean broad 2-legged pullbacks, measured moves. Quite few setups at the very beginning of the session. A lot of setups on the way down, but a long area here without any good setup. This second entry short is decent, but you can't take anything here, you can't take anything here. So you have to be really patient throughout this area. And eventually, once again, market will reach the extreme, brand new downtrend will get established, and you get the opportunity to look for setups. So I'm gonna wrap it up. I hope you had a good trading day, and good luck with your trading.